guide the early stage founders if they are attending IIT 2026 mega event, how they should be spending their day?
So I have been founder in the past, and as a founder, especially early on, three things are important to me: fundraise, sales, and building team. Literally, there's nothing else important to me as a founder besides those three things. So as a startup, in one event, you're going to find all three of that under 3 days.
Let's talk a little about the value that it is going to give to the early stage founders, the growth stage founders, and investors and corporates who will be attending and who will be part of the 2,500 attendees who are going there. So, what type of value a early stage founder can seek out of this event? This is a 3 day event, and the growth stage founders and also the investors are going to do some matchmaking for investable startups who will be pitching there. What is there in them for them?
Yeah. So, what is important for early stage companies? They're looking for fundraise. They're looking for go-to-market strategies, product market fit. They're looking for VCs, and early on, they're looking for input from the industry leaders.
Mhm.
And literally, you will find all of that under one roof in that 3 days. Um, you will have venture capitals. We have a program on go-to-market strategies. We have leaders across the industries um, right there to network and seek their input. In fact, you may find even your customers. And if you are that early, you may even find your co-founder.
Right.
Uh, because we will have many technologists and business leaders who has successfully done this in the past in that one room. If you're a growth stage, again, what is important to you? You're growing, you're looking for high level of capital, you're looking for Series A, Series B. We will have many investors who are investing at that stage of the company. So you get to meet. Of course, we are matching also with the investors. We have a workshop on go-to-market strategy and the fundraise, especially product market fit, and how you can scale once your product market fit has been established. If you're a VC, this is a one event where you not only will meet your deal warehouse, you're looking for deals to invest into, but also at the same time, you're going to learn how industry is moving and changing, how AI is shaping our life. I mean, AI is pretty much impacting everyone. So you
Mhm.
see this trends, industry trends, industry insights. You meet the startup to potentially invest, and then how various policies, if you're a global investor especially, how China US relationship, how India US relationship, Canada US, Europe US, how these policies are impacting our life and our decision making process. We will
Mhm.
have six grand keynotes. They are going to paint a picture about future, what's going to happen in 2030, in 2040, in 2050. And these are visionaries who has done wonders in their life, and they are thinking about where the future is heading, the AI, the quantum, and we these people are going to share very specific, not just high level. So you get to
Mhm.
learn as a VC about all this industry trend. I cannot think of one event where you go find deal warehouse and also learn about industry, how industry is moving, and then you meet as part of networking these industry leaders. If you're a VC investing in healthcare, you will have Sachin Jain, the CEO of Scan Health, right there. You will have David Schulz, who is the ex-VA secretary. If you're doing anything around CMS and Medicare and Medicaid, you get to learn all that from these industry leaders. So there's a
Mhm.
value for each and every of those entities, Anshuman.
Right. It's going to be a mega event. I can see that. Shati, you are a keynote speaker. You go to so many events as a panelist, as moderator. Uh, you know, when you see a founder coming and attending a investor summit like this or a event like this, what should be their priority? What they should be doing? They should be going through the aisles, looking at all the uh, displays that are out there. They should be sitting in each of the keynote speaking gigs which is happening there. Please guide the early stage founders if they are attending IIT 2026 mega event, how they should be spending their day.
So I have been founder in the past, and as a founder, especially early on, three things are important to me: fundraise, sales, and building team. Literally, there's nothing else important to me as a founder besides those three things.
Mhm.
So fundraise, sales, and building team. So as a startup, in one event, you're going to find all three of that under 3 days. You will meet VCs. We will have many stages of venture capitals.
Mhm.
Sales, you will find customers, by the way, because we are bringing business leaders right from senior manager all the way to CXOs. And then team, I mean, we will have engineers, we will have high tech professionals, we will have business leaders. So, not just the technical side of your team, but even the business side of your team, go to market strategies, marketing professionals, sales professionals, but of course, the engineering background also. And as I said earlier, you may even if you're looking for a co-founder, you will find
Right.
maybe a co-founder to join your team as well. So under one roof, you find all those three things as a startup founder.
Let's jump into the second segment of the podcast, zero failure VC strategy. What actually works? Shashi, you have invested in 42 plus companies with zero failure rate, unheard of. For the founders and investors who are listening to this show, what is your investment thesis? What you actually look for in a founder? What is the formula of zero failure investment?
I mean, I had the typical DD diligence document. Most of us do that. You look
Mhm.
for right founder, right product, right financials, product market fit, how things are growing. I would say since I have been founder in the past, it does help me to read between the lines when the pitch is being presented. Um, and part of my due diligence, the two, I'm sure others are also doing, but two unique thing I do is I always speak with the customer. Um,
Okay.
and I request the founder to be not there in that room when I'm speaking to a customer of that particular company. And I get a lot of sense, by the way, the way customers are talking to me. Um, and one of the question I often ask to the customer in the end is, what happen if this company does not exist tomorrow? And the answer is very revealing. Some will say, "Oh, I will go to new product." Some will say, "Oh, my life will be impacted significantly."
Mhm.
Um, some will say, "Oh, I may have to create another product if this does not exist." So a lot of insight comes when I meet with the customer. I also ask, "Are you willing to be a reference customer for this company?" Again,
Mhm.
it tells a lot. I mean, how this individual is responding to me. Someone will say immediately yes. Someone will say depends. Someone will say I don't know. It tells a lot about what the relationship this customer has with the product. So
Mhm.
that's one. Number two, I always speak to one of the existing investors, and I understand the genesis or thesis this particular investor had when they made the call to invest. Um, so that's the second area I do. And third, I deeply care about traction. And since I only invest post revenue, I ask for the last 12 months of P&L. So last 12 months
Mhm.
of your revenue on a monthly bracket, not quarterly, not yearly, in a monthly, your revenue and your expense. And I pay attention to your MRR. So how fast or how slow your MRR is going. And if the MRR is not going this for a 1 or 2 month, there's a dip, there's something not right. And then I dive into the detail.
Mhm.
And if the MRR is growing or there's a dip, but your expense is going and it's not aligning with your revenue, that's not a good sign. Um, so I think these three unique things, which I think I do, and it's not just one; it's a combination of those three things. In addition to doing your normal DD doc, helps me, but also this intuition I have, where I have been told in the past that, hey, Shashi, don't invest in this company. I end up doing it, and they are doing so well.
Mhm.
It has happened 3 times actually. Some said, some of my friends said, no, this is not a good investment. I felt in my gut, in spite of
Mhm.
all those analysis, that it's a great investment. I end up doing it, and I have exited one company based on this. People said, no, this is not a good investment. I end up doing it. In 11 months, I got 7 times return.
So once you invest in a company, in a startup, Shashi, how do you manage those portfolios to keep the companies from failing? What is your playbook, if you could share that, for turning good founders into great ones?
Yeah. So I'm very deeply engaged with all my portfolio, each one of them. Um, and I request on a quarterly basis their financials.
Mhm.
Again, the P&L, the revenue and the expense. And once you make the investment, for me at least, the two things are important for a company. The fundraise, what's the runway the company has, um, and second is growth, sales, growth, marketing, all that. Um, and those are the two areas I tend to help the founder because yes, building team is important. Sometimes strategic relationship is important, and I trust the founder on those two areas. But if there's something not right in the financials, your revenue is not growing on month by month basis, and your expense is not aligning with your revenue, it tells a story about it. And then what I do is I call a one-on-one meeting with that founder. And my
Mhm.
meeting is not to call less score. My meeting is to understand what's the detail and where I can help. And literally, at many cases, either extending the runway or connecting the founder to the right players to grow the company, either sales, marketing, or finding someone who can. Um, because when you are a founder, you are so much into trenches, you're not paying attention to the bigger picture. And our job and my job as an investor is point those bigger picture. Um, some will think that, oh, I have 2 months or 4 months or 5 months of runway and it's okay. I said, no, you need to have minimum 18 months of runway.
Mhm.
Some will think that, oh, my gross margin is 60% is fine. I said, in tech business, if your gross margin is less than 80, something is not right. Um, your MRR is growing by 12%, but your expense is growing by 30%. Something is not right. Um, so these are not rocket science, they are simple things, Anshuman. And I pay attention to all my portfolio about those specifics which I just shared with you.
Right.
And and depending on and then I categorize because I cannot spend so much time with each. So those who are doing really good in those statistics I just shared with you, I'm fine. They send me a report, I'm good. The medium ones, the second layer, I kind of keep in tab, but the pay attention to the bottom cadre. And this is where
Mhm.
I call one-on-one meetings. And then once I call the meeting, we agree as a founder. It's not more about scolding or it's not more about, hey, I know more, but it's more about brainstorming together
Mhm.
and and trusting the founder that you are the right person to lead and establishing some action item that okay based on this let's do one two three. and then we keep and tab and track and how this company is doing. And I have, by the way, there was a time a company was in the bottom portion, now they are in the top portion.
Wow.
So it does work.
So you are not just investing in the company, you are mentoring that company, you are guiding that company, you are bringing the relationship to those companies to help them scale and grow in their business.
That is correct. That is totally correct. I would also tell you, most people think that founder's life is easy. It's not. It's very hard life. And I'm not
Mhm,
discouraging, by the way. It's very exciting also at the same time. So I'm not trying to discourage, but I also trying to paint a picture that the reality is your life is not easy, because you as a single co-founder or co-founder or three, you're getting pulled into so many areas. You have early investors, and even 10 of them, they have a different set of expectation. Then you're managing customer, especially early. Then you have a team early, and then you're managing so many challenges. It's not easy. Sometimes as a VC, since I have been founder, I know their life. I call them and I'll say, hey, how are you doing? Forget about business. How are
mhm,
you doing as a human being? And I will not mention, but one of the co-founder, he was trying to raise the fund. He couldn't. His runway was less, and he was super stressed. And I said, it's okay. Calm down. Maybe take a day break, and then come back. We will help you. We'll figure it out. He ended up raising
right.
the fund. He's doing well. But the period they go through, since they have not seen this, especially if this is their first time rodeo, they get stressed. And when your brain gets stressed, then you're not thinking. And if you're not thinking, it's going to impact and you go into that spiral. So as a VC, you need some time that nudge. It's okay. It's normal. It has happened in the past. Reminding them that reality is also important.
Mhm, mhm. So true, so true. Let's move on to the next segment, which is the pitching to VCs and what gets your attention. So, you have been listening to so many pitches all around the world. Shashi, hundreds of pitches, maybe in thousands. What, how a founder stands out in the first 5-10 minutes to you, so that you give them more time and invite them for a deep dive call or a more exploratory call before investment. What are the traits of that founder which attracts the investor to line up or be in touch with them and ask them to come and pitch more?
If you're talking just the founder, their confidence, their knowledge about their product and industry.
Mhm,
Uh, and I often say that if you're founding a company, you do need to understand finance. Please don't say, let me call my CFO, especially early on.
mhm,
So my preference is I want the CEO to be explaining the numbers. And it reflects, by the way, when I say confidence, when you talk about your product, your solution, your customer, your financials, how much knowledge you have. And when I ask the question, and I'm very detailed, by the way, I go deep. So when I'm asking those questions, I can assess and judge how this individual is answering back to me. Oh, let me come back. When I hear those kinds of things, I feel you're not prepared, you're not ready. So make sure when you go to a VC to fundraise, not just the pitch deck, you are deeply integrated into every aspect of your business, from product,
mhm.
customer, financials. So that's very important to me, that founder is aware about the business. If you're asking just what I look for into the founder.
Right, right, right. Great. Uh, Again, you have heard so many pitches from founders. What are the biggest mistakes? And this segment we are going to talk about that how to train those founders who are coming to global VCs. What are the biggest mistakes founders make when they pitch to especially those type of founders from different markets, trying to pitch to global VCs? Uh, you know, you are here in US, but your portfolio might be in Dubai, a company might be in India. So those founders who are from a different market segment or a geographical territory, when they come to global VC, what type of mistakes do they make, or how they should prepare themselves to go and tackle a global VC?
Yeah, I mean, it goes back to my previous comment. Be aware about your business. Um, so when you are not aware, you're talking not realities. When you start to talk about TAM and SAM and SOM, unreal, which is not realistic, believe me, VCs can figure it out.
Right.
When you're not aware about your business, you start to say something and the VC is asking back a question and you're not answering correctly or to the point, VCs will figure it out. Um, if your financial projections are not right, I mean, I sometimes I laugh that when the founders comes to fundraise and their last 5 year has been like this, and the moment they are asking the money is going to be like that. The curve goes immediately up, and there is not enough substance behind it. What are you going to really do different, which is going to make this immediately after the fundraise it will go up?
Mhm.
Uh, so be realistic, be genuine, make sure your financials every that's another mistake I see, that their financials are not tied together, meaning that their monthly MRR is saying something but the number of customer is different. uh,
Mhm.
their business model says that they will charge $200, and I very quickly in my brain do the math with number of customer you have. um, the numbers are not adding up. You have not accounted for churn rate. So you say your churn is 3%, but that 3% is not accounted in your financials. So make sure your financials are in order. Every number you have, go in detail and validate. Because if you do the ground up financials, especially for the revenue, things will add up. So just don't put a number, and make sure that anything, that's another thing, don't lie. Believe me, VCs will figure it out.
Mhm.
If you say that if you have not signed a customer and their logo is appearing on the pitch deck, that's such a red flag. Don't do it.
Right.
Uh, um, if you have a advisory board member or a board member and you have not signed, or that individual has not even aware about it, and you put their picture and name on the pitch deck, don't do it. Um, so
Yeah.
these are basic, in my view, common sense to apply when you go raise to the VCs.
So when you are considering a startup founder to invest into that, what type of traction they should have before coming and contacting with you, Shashi? Do you have product market fit or a revenue number or a MRR, ARR, uh, you know, data set ready with you that hey, don't reach out to me unless you are at this level? Do you have something like that?
Yeah, so I mean, every VCs are different, by the way. That's another thing I'll say, that before you approach the VC, do some research about what area they invest into. Um, so for me, specifically, Ansuman, I invest anything technology, B2B post revenue. Um, and for me, the post revenue is anything around 250, 300K ARR plus. You have to have minimum 1 year of revenue.
Mhm.
You have to have minimum 7 to 10 customers. So those are the criteria for me, and it's very easy to ask those and answer that. So when someone reach out to me, I very quickly glance through the pitch deck, um, and if I see those numbers, then I call the meeting, those information. So that's my criteria.
Okay.
But most VCs have different criteria.
Mhm. Mhm. Okay, now let's talk about those founders who are making something, a global product. What are the pitfalls they should be aware of when they are trying to create something local and now they want to distribute it at the global scale? You have been helping such companies currently also. So, what are those? when a founder tries to scale too fast, what are the things that they should be aware of, which usually breaks very, very quickly?
Yeah. I mean, I often say in the beginning, especially if you're a startup, make sure that your runway is 18 months.
Hmm.
Economic condition can change fast, and don't underestimate that fundraising is not as easy as you think, and it takes time. Fundraising will take time. Um, so, whatever you are expanding, make sure the expenses for that expansion is accounted for, and make sure that the revenue in combination to the cash in combination to the fundraise, you have minimum runway of 18 months. That's
Hmm.
number one. Number two, when you're expanding to a different territory or different geography, what your marketing strategy has been into the current geography will not work. The value propositions will be different for the customer into the new market. The product labeling might need change.
Hmm.
In one country, I'll give you example, like in India, you may call it medical record, but in US, we call it MRN number. um, so, I mean, HL7 is a global standard, but here in HL7 in the fire is very much standards. So when those terminology into your product are not matching, it will not sell. So that's the second area around marketing. Make sure the local um, spoken language are accounted for in your value proposition, in your marketing, in your branding, in your product. And third is the team itself. The
Hmm.
team which has been, especially on the commercial facing, the team which has been commercial facing in the current territory may not work into the new territory you're going to. And as you're scaling up, have you accounted for other areas of team you need from product support, from engineering? So those are the areas, in my view, you have to account for, in my view, Anshuman.
Great. Thank you. Thank you, Sashi, for that. Let's talk about the founder's readiness and mindset. What separates the winner from any other founder that is out there? Let's talk about the mindset difference between someone who is in a corporate role versus someone who is building a startup from scratch. What do you see? Because many a times for deep tech companies, for med devices company, those founders are who have been working for large corporations, for Fortune 500 companies. What is the mindset shift that they need to have to build a startup from scratch coming out of a corporate ladder?
Yeah. Um, Resiliency,
Hmm.
going deep, and not giving up at any cost.
Okay.
Um, as a founder in a startup, mark my word, you will have challenges. Mark my word, you will see the low point in the business. But at the same time, when you saw those challenges, you see those challenges or low point, your resiliency, your can do attitude, and never give up attitude will help. I often say that when I hit the wall, I go deep. What it means is that when you're facing a challenge, and many times you will face a challenge where you don't have money, you are about to be asked to close the shop, close the company. How do you go deep? Fine, figure
Hmm.
it out, hustle, think creative, think out of box, think not things have not been done in the past. Reach out to people, be shameless. That's another thing I would say. Some founders, especially, oh, should I really ask this? Why not? Ask anything, literally, as long as you're being respectful and genuine and human. I mean, we all are, at the end of the day, we all are human beings.
Right.
Um, so hustle, Really hustle and go deep, go detail. Don't give up. Many times, by the way, as a founder, you will hear either VCs or people don't even know detail. They will come, oh, this is a crappy idea. Oh, you shouldn't do this. We
Hmm.
often say that advice is free. Listen, I'm not saying don't listen, but believe your gut feel,
Hmm.
believe your conviction. And if you
Hmm.
have that belief, put everything you have from the efforts perspective into it. Don't give up. Do not give up. I have seen founders were like this close to closing the
Hmm.
company or $1 billion company after 6 or 7 years.
Hmm.
So that's the attitude. I would say feel good about your conviction, be resilient, don't give up. And when you come across challenges, go deep. When you hit the ball, go deep, as detailed as you can go. Think about every potential possibilities. You can figure it out to solve that challenge.
For a founder who is going for fundraising, we talk a lot about skin in the game. How do you define the skin in the game? They should have invested their own capital into the company, bootstrapping for a longest period of time. What are those parameters which tells you, Shashi, that this guy, this founder, is really invested into his startup?
It's like giving all in. Giving all in doesn't mean only dollar. Um, you waking up and going to bed, literally you're thinking about that. Um, and I'm not going to say for most founder, but to the founder, in my view, don't think of work-life balance. That will not be there, by the way. If you're thinking about, oh, I can run a startup and at the same time I can put a lot of time on me and a lot of time on family and friends, probably it's not going to work. So as a VC, we most VCs will figure it out whether you are all in or not. The way you're talking, the way you are responding back into the email, how fast you respond, what's your follow up, what's your follow through is important. So I'll say Anshuman all in. And when I say all in, how extreme you can go to be all in your company. Can you put your house if needed? Can you empty your bank account if needed? Can you put your car? I mean, my first company, I was on the verge of all of that, by the way.
Hmm.
So, to what extreme you can go to go all in into that startup? Think about when you have a baby, when you have a daughter or son,
Yeah.
and this kid is born. As a parent, in my view, you will do everything, even the last bit of your efforts to make sure your kid is grown. So I treat like a startup like that. It's your baby. What extreme you
Yeah.
can go to support this company. VCs will figure it out, by the way. So you think as a founder, when I'm talking to you, the way you are talking, the way you are using your words, I'm paying attention to how you are speaking to me. And not just how you're speaking when the meeting ended. I'm paying attention whether you are paying attention to all the things I ask. And when you send me the follow up, have you accounted for all things I ask?
Hmm.
And whatever date or time or action item we have agreed, are you doing that?
You're right.
And when I ask again, how much time you're taking to respond back to me? Um, how coachable you are. um, I come to a meeting and your revenue is 500K and you're asking $30 million valuation. And I say, hey, founder, have you looked at PitchBook data or have you looked into other industry? And then, oh, but you don't know, my product is great and I have done this and this. And I look back your last 12 months and your MRR is going 2%, and that 500 is not matching to $30 million. Right there, I have a doubt. You do not understand your product. You do not understand the industry. I'm done.
Some wisdoms to startup founders who are building, who wants to change the world, what they should look for before going the VC round. So they have invested. Think of a founder who has invested their own money, bootstrapping, and then they did friends and family round and angel round, and then now they're going to be ready for a VC round. How they should prepare to come to you from document perspective, from a cap table perspective, or any of the wisdom that you have seen that,
Hmm.
hey, if this founder would have done that, he would have made himself or herself more investable. One is obviously the
Yeah.
valuation. Somebody talking a $1 billion TAM, and then the valuation, as you said, is 500 MRR, 30 million doesn't make sense.
Yep. Yep. So make sure your pitch deck is rock solid. Make sure the 10 points about pitch, which is problems, solutions, secret sauce, sales marketing strategies, finance, your team, your ask, your market traction. Make sure those elements are there in your pitch deck. um,
Mhm.
um, Most of the time, I receive a pitch deck and it's incomplete. And I really don't have time to go look for those gaps and respond back. Hey, give me this, this, this. So do a really good research too, and there are lots of article out there. And I repeat myself 10 points, and you can Google it. I just listed it down also briefly. Make sure those 10 points are there. Um, Make sure your pitch deck is not cluttered, is clean. Make sure that every element or information you have in your pitch decks are aligning. As I shared earlier, you cannot say your core customer, your business model is $100 per year, and your financials are not aligned. Your revenue is not aligned with that. So make sure that is aligned. Um, Also, when often I see the ask how much you're raising, you're not sure. Sometimes I see a pitch deck, oh, I can raise $1 million, but I can also raise $4 million, and my pre-money valuation is 10. So how do I value your company if your pre-money is 10, you're raising 1 versus 4? Am I investing at 14 or 11? So that is not right.
Yeah, yeah.
Be sure. I'm raising 2 million at 12 million post money.
Hmm.
And also in when you're raising this 2 million, um, explain. I love founder when they come, I'm raising 2 million, I'm at stage here in terms of my revenue or customer, but after the 2 million I can be revenue here and customer here.
Hmm.
I love when they have thought through that level of detail. Not just I have 2 million, I'm going to invest 10% in sales and 30% in R&D. It's good, don't get me wrong, but extend that beyond. And just if you've thought through that 2 million can give me my revenue from 500K to 2 million, my customer base from 20 to 60, and make sure those numbers are again matching with your revenue. I love that founder has thought through that forward. um, Pitch deck tells a lot about founder, by the way. Pitch deck
Hmm.
tells a lot about founder. And that's the first interface you are having with the VC. So make sure you put
Hmm.
time in crafting your pitch deck, and make sure those 10 pointers are there. Make sure it's not missing. So that's the advice. The second piece I will say that make sure your data room is ready. And again, there's lots of article about what to keep in data room. But basic
Hmm.
information says your financials, your customer, your cap table. That's another area I see founders are not deeply paying attention to the cap table. Pay attention to the cap table. This will come back to bite you later when you are going to raise. When you are going to institutional investor, they will pay a lot of attention to the cap table. So cap
Hmm.
table is there. Basic contracts about the customers are there in place. Make sure that the initial stock allocation you have done to the founders and the team, those are in place. And there are lots of article about what to keep in data room. So make sure your data room is standard and
Mm-hmm.
has all those basic information.
Mm-hmm.
Those are two things I would say pay attention to.